Good morning, traders, and welcome to the Elliott Wave Street free weekly update. I'm Juan Maldonado, and we are going to check some live markets using Elliott Wave. Please read our disclaimer at elliottwavestreet.com. So this is the pound on the 4-hour chart. It seems that is ready to start the leg down, to start the drop. I have a target at the previous low around the 114.20, which is quite interesting because we have a pretty big distance from the actual price all the way down to the target. Now the next question is when? The big question is when the price will be ready to start the leg down, because timing is key. So if you join the membership, the Elliott Wave Street membership, you are going to receive the precise trading levels this week for the pound, where I validate the pound. But mainly the plan will be to watch for these lows, and I'm going to look for the breakout of that support, and from somewhere there I'm going to start selling the pound. I don't have the levels yet, but I will have them during the week, so that's why it's so important that you take the trial on Elliott Wave Street to receive our professional wave counts every day. So let's get ready for the short on the pound. Now, another favorite for the week is the New Zealand dollar, the Kiwi. The Kiwi. Last week, I sell the Kiwi at the 60-60 area, right here. And then the price went all the way down in my favor, and I closed it during the wave 5. And it started then to bounce up for the wave 2. This wave 2 already went to the 61.8%. These Fibonacci levels are not going to be precise, however, are good reference points to understand the markets. Now, the next step for the wave 2, because the question we need to solve this week is if the wave 2 is done or not. If the wave 2 is done, then we're going to start finding the leg down. All right. Target is the 59.20 at least. And then from the daily chart, the next level will be the 54, because I think we need to have a lower low. So look, what we are doing here, we are taking the short rate after the wave 2 in order to trade wave 3 and to have the leg down, this market cycle down. Now, we need to be smart to take the best from the Elliott wave count, but being smart and taking a safe and healthy trade, because timing is key. So now we have an analysis. Okay, is that enough to take a trade? No, of course not. With the analysis, we need to have something else, and that will be the entry strategy. Now, let's add some trend line over here. We can also have the channel line over here telling that it's losing momentum. This thing looks like a wedge. Do you agree? So my plan, of course, I'm going to share my trade with my members, will be a sell around this area to validate the Kiwi trade. Not yet. Right here, the price could very easily make a hard high. But if the price reverse fails and starts going down, that's where I'm going to start selling, somewhere here. The first target, the previous low, to take partial profits. And if it breaks, I'm going to hold it. So this is pretty exciting because we are getting ready to jump into the wave 3. And on the other hand, what if the price right now gives us a green candle and crosses up? We are not going to trade this thing, right? Make sense? Because never validate. And if that happens, we're just going to move the B wave to the right and take the trade higher. But I think that this is a reversal. So we are getting ready to sell the Kiwi. Now let's continue with the S&P. On the S&P, we know that the price is moving up thanks to the Fed, because the Fed is printing money and is buying things on the financial markets to push the price higher. Now, the Fed is going to start buying plane tickets. Are they going to start buying iPhones? Are they going to start buying clothes? Are they going to go to restaurants all during the whole month buying food? Of course not. So this is not real. The economy is going down. We have a huge unemployment in the US, and the markets are going up. Why? Because the Fed is creating this fake move. The plan of the Fed is to buy these things while everything eases down, while the health emergency starts calming down, and then when the economy goes to on again, it matches the timing of the Fed and the price will continue higher. That's their plan. But it seems that this is going to take longer. Now, let's see it from the technical analysis point of view and from Elliott wave. Look, here we have the price losing momentum. The price is gaining momentum when we have this thing. And when we have this one, is losing momentum. When we have a scenario where we are losing momentum, the target is the previous low. That easy. The next question is when. Because I have been suggesting some ideas. For example, last week I was saying to my clients, well, what if this is wave 1 and this is wave 2? Well, if it's that scenario, we're going to sell here or we're going to sell here. And if the price goes up, similar to the New Zealand, and if the price goes up here, we're not going to do anything. And that was the scenario. And here we go again. So now we need to have our 5-wave sequence. So far we have 3. With 3, the price could very easily reach a higher high. But if we have the 5 and then the 3 up, that's the sell trade. Of course, I'm going to guide you during the entire week, step by step. If you take the membership, the Elliott Wave Strip membership, I'm going to guide you step by step to take these trades. All right, let's have a look at oil. Oil is going down. We have on the oil the price adding more momentum to the downside, and we are seeing on oil the price reaching 17 area. Wow, that's impressive. Who wants to buy oil? Who wants to buy oil when nobody wants oil? That makes sense or not? Do you want to buy the futures oil when nobody is using oil? Nobody is taking a flight. Nobody is taking a trip to their works, to their jobs, right? Everybody's at their homes. So why would you buy oil on the futures market if nobody is using oil these days? That's a big question, right? So be careful with that. I think that eventually we can have a little bounce during the week because big countries are not going to let oil go to these levels that easy, but eventually we will continue lower. Demand is pretty low. Supply is pretty high. The perfect storm, the perfect situation where price is likely to continue lower even with all the efforts from big countries, so from big oil producers. So don't try to buy oil, right? It doesn't have any sense. All right, traders, if you want to take our trial, visit us right now, ElliottWaveStreet.com, and then visit the membership tab. On the membership tab, you will find all the details about this fantastic membership, where we have it for the Forex trader, for the stocks trader, or the full access. Here are the instruments that I cover daily, with a daily video, with a commentary, with charts, with Forex trade ideas. I also cover some stocks on the stocks package. So pick your package. If you want to add the forum, here at the bottom, you can take this one for $29 a trial with the forum access, where you can ask questions, where you can see some additional content. All right, traders, so I'll see you inside the membership. Please have a fantastic trading week and make some good money. And I'll see you soon. Take care. Bye-bye.